Want to buy a home and don't know where to start? Self-employed and freelancing and worried about qualifying? Interest rates got you frustrated? A mortgage lender pulls back the curtains. Hello and welcome to Homes and Horizons podcast, the show that informs and empowers you through some of life's biggest transitions. On today's episode, you'll leave with actionable insights to improve your loan options and budget, avoid pitfalls, and make informed decisions about one of life's biggest moments. I'll be grilling Steve Birk, a local mortgage lender with tons of industry experience and one of my preferred partners. How you doing, Steve?
Fantastic, Savannah. Thanks for having me.
Thank you so much for coming on, sincerely. Steve is extremely knowledgeable. He has helped me personally and my clients through many, many deals, so super excited to get you to answer some questions for us. So let's jump right in. How does the mortgage approval process work from start to finish, and explain it like I'm 5?
Okay, great question. I'm going to give you how we do the mortgage approval process because a lot of different lenders do things a little bit differently.
Of
I
course.
think we do it a little bit more detailed that'll help the borrower from start to finish. So initially, we want to call the client. We want to have a conversation with them, or consultation. We call it a dreams and goals call. We're going to sit down with the client. We're going to talk about their goals, their situation, answer any questions that they have, and we'll start the pre-approval process over the phone. You could do it online, but I think doing it over the phone's a little bit better, and you get a little bit more dialed into the clients and their
Yeah,
needs.
and they get to know you a little bit more. They can ask
100%.
questions, and it's not just like a form they fill out.
100%.
Okay.
So we'll go through that process. We'll get all their important information. Then we'll follow up after that with the documents that we need, because
Awesome.
we're going to review income. We're going to review employment if they're employed, assets. We're going to review credit, all those different things. And then we're going to verify them as well. We're going to make sure we look at pay stubs, W-2s, the credit report in detail, all that stuff.
So
And
having that ready definitely helps the process.
Yes,
Just being able
100%.
to hand that over.
Be organized. We'll talk
Argue
about
with the
that.
hot takes.
Yeah.
Be organized. Okay.
So then if everything looks good from that standpoint, then we'll issue the pre-approval letter. We'll do a little bit of an analysis for them to show them how the breakdown is for whatever programs that they qualify for, and rock and roll, go house hunting.
Awesome. Yeah, that's what we need to do. Okay. And how much do you really need for a down payment? Because I talk to a lot of people and they're like, we really don't have 20% saved up. And I'm like, look, if that's what's stopping you, like, talk to my people, don't just sit there and be frustrated over like this myth,
Yeah. Definitely a myth, but it goes back to like our parents and our parents' parents, that 20% back years ago was the standard, right? So everybody has kind of kept that going.
Okay.
So far from the truth. Basically, depending on the client and their qualification, you can probably go anywhere from zero down payment to the 20% or more. I mean, you could put 80% down.
Right, of course.
So, but yeah, there's zero down payment programs, 3% down, 3.5%, 5%, all those different variations.
Awesome. So there's options, which is what the people need to know. There's not one standard. And then, can first-time home buyers qualify for a mortgage with a low credit score? Because, the economy, the inflation, people are having to use their credit cards more. Talk us through that.
Yes, they can. It depends on what you're defining a low credit score.
Fair. Fair.
Different loan programs have different qualifications for scores. For example, the lowest you can go on a conventional loan, your standard loan program, is 620. FHA, VA loans, they offer a little bit more flexibility. Usually the standards down there, you see a lot of 620 to 640 scores being good. You can usually go down to 580 if the client is not financially mismanaged their situation from
Right.
a credit standpoint. We don't want to see like constant late payments all the time and things like that. But if they had like a divorce or a event or bankruptcy in the past and they've re-improved and reestablished themselves,
Sure.
then 580 is possible if they meet all the other guidelines.
Awesome. Okay, that's great to know. Everybody listening, that's not something to stop you. You can't use that as an excuse anymore.
Very true.
You can't use that as an excuse. And then do you have to be completely debt-free to qualify for a mortgage? Because some people talk about, have their student loans. That's a big thing for my generation, right? Cars, some people have multiple properties that, they're considering, and they just have a lot of loans there. So what about, being debt-free to qualify?
Well, if we said they needed to be completely debt-free, we probably wouldn't have anybody buying a house.
Not in this day and age.
Right. The lower the debt, the better.
Of
Not going to
course.
argue there.
Hmm.
But it's going to depend on the client's qualification. What's their income? We take all of their debts and then we divide it into their income and look at their debt to income ratio
Hmm.
is the standard.
Okay.
So we want lower debts, but that's not going to stop somebody if they have excellent income and they have a few debts, car payment, a student loan, things like that. So it again depends on the qualification of the individual borrower.
Awesome. Okay, and then is getting pre-approved the same as getting pre-qualified? Because once I start talking about pre-approvals, some people are like, "Oh no, I don't want a hard hit to my credit. I don't want, no, I don't want to do all that yet." And that's something that definitely stops them from being able to take the next step. Um, Controversial opinion. I don't want to take you out and show you homes if you don't have a pre-approval, because if you fall in love with something and okay, great, you want to put an offer in, well, we need a pre-approval to do so, right? That's like the first thing, so that you can be timely. You can immediately put an offer in, sometimes in the time that it takes for you to get pre-approved, which doesn't take long normally, right? It's not like a
No, it's pretty
super,
quick. If
super.
you got everything together and you can get everything and everything looks good, yeah, we can knock it out within a day.
So sometimes within that day, if you think that's a good deal, someone else is going to think that's a good deal too, and someone's going to swoop in and buy it. Now, when you're getting pre-approved. So it's best to just get that out of the way. But there is this, like, I don't know if it's a stigma of like talking finances with a stranger, like that feels uncomfortable, or whether it's they just don't know where all the paperwork is and they're just disorganized, like you said. Um, so is pre-approval getting the same as pre-qualified, and is there a difference, or is it the same thing?
Yeah. You mentioned an important thing. It's like a psychology right now is to take the fear out of having them at least talk to a lender and at least have a game plan.
Right.
But when I do a class on Mortgage 101 and we talk about pre-approvals versus pre-qualifications, and believe it or not, there are some banks and some lenders that still do a pre-qualification, which is basically sometimes looking at a credit and
Hmm.
then asking the client what their income and what their assets are and not necessarily verifying them.
Oh.
That's a pre-qualification. We used to do that, let's say pre-2008, this ages me a little bit, pre-2008, we used to do pre-quals all the time,
Mm.
right? All the time, because we had so many programs. If they didn't fit later on into it, we'll change it.
Right.
But now we're in a pre-approval world. We're in a get all the information, verify their credit, verify their income, verify their assets, and then issue the pre-approval letter. Then you can go out with confidence in showing them homes.
And that also brings up, if you approach a lender and you're speaking to a lender and they don't really do you the service of going into detail, then that's your signal. How are they going to be throughout the rest of the process, right?
Yep.
So that's a good indicator there. Okay. And then how do mortgage interest rates actually get determined? This is going to be one of our hottest takes. What actually goes into it? Is it just, the federal government? Is it, do banks have a say? What is the mixture? What is the method?
Yeah, I'll try to simplify this as much as possible because it can get kind of more complicated. But the first thing
Yeah.
I'll tell you, it's not determined by what the media tells you. Okay?
Yeah, there's lots of things swirling around out there,
So be careful. They're not mortgage experts. They'll say things a lot of times where mortgage rates are down, but they get a lot of their information in a week or two later, and
Right.
things have already changed. Over the past couple of years, mortgage rates have been very volatile. Mortgage rates are based on mortgage-backed securities or mortgage bonds, right? So it's kind of like supply and demand with that, and that dictates what your interest rates are going to be. One big factor that we see that works side by side is inflation. So you'll see inflation and interest rates move side by side. So as inflation goes lower, we kind of feel that we'll see a trend of interest rates follow. So you can see if you follow the inflation charts, you'll see that interest rates went higher when inflation went higher. And as it started to creep down a little bit, you saw it level off a little bit.
Is that an instance where, like, correlation does not prove causation? Is it just
Not
a
100%.
trend that you're seeing? I just want to clarify
Not
that.
100%,
Okay.
but it moves historically pretty close to, where
They're
inflation is.
frenemies.
Yep.
Okay, gotcha. Okay, and then does a higher credit score always mean a better interest rate? Can people trick the system and, into getting a better loan?
Trick the system. They can improve their credit score, right? They can do things to improve their credit score pretty quick. Some things take a little bit more time.
Of course.
It won't always help, but the majority of the time, a better credit score is going to give you a better rate. FHA, government insured loan, will have less discrimination on interest rates. Usually a 640 score versus a 740 score is not going to be much of a difference on FHA, whereas a conventional, there'd be a massive difference between a 740 and a 640 score.
Okay. And just for the people out there who don't know, an FHA loan is for first-time home buyers. So
It can actually be used for people other than first-time home buyers. Okay.
Please
But
elaborate.
most people use FHA for a first-time home buyer because it's low down payment. It offers a lot of flexibility, especially for the financial situation of a lot of first-time home buyers.
Okay.
But you can use it as long as you don't have another FHA loan already in existence. You can use FHA as a second-time home buyer. Yep.
Awesome. Okay. What qualifications go into that?
For FHA?
Yeah, for being for buying your second home
so-
and still using an FHA loan.
Well, so your standard definition in the mortgage industry of a first-time home buyer is not owning a home in the last 3 years. So
Got
if you
it.
own a home like 10 years ago, you're not considered a first-time home buyer if you don't have a home in the last 3 years.
Awesome. So anyone who's been doing the van lifestyle, cruising around the country while COVID hit, and all the online, anyone who worked online just got in their van or their camper and went on the road. So it qualifies for them. Anyone who's been renting for the past over 3 years.
Yep.
So
sure.
that's great to know there. And then let's talk a little bit about being self-employed and being a freelancer, because that, the gig economy really went up during COVID. People got laid off. People had to, start over and started their own businesses. So what does it look like for them?
Okay, that's a great question. It definitely adds a bit of complexity or a little bit more involved in getting approved if you are self-employed or have any type of 1099 like gig economy income. So basically, a lender is going to look at a 2-year. For a self-employed person or a 1099, they'll look for 2-year history of tax returns and being in business at least 2 years.
Okay.
Okay, that's the standard.
Cool.
There's variations from that, but then they're going to look at your net income also. So one of the big things that we see in that industry when you're self-employed or 1099 is people tend to write a lot of expenses off, so they don't have a lot of taxes to pay, right? But that's a catch. Right, when it comes to the mortgage industry, because we want to show
you any profit.
net,
Yeah,
exactly.
you didn't make any money. It went all back
we
into
need
business.
to show some net income to be able to use that to qualify. So that's the big catch, and we try to get them ahead of time so that they can plan accordingly in the future on how they show their taxes, so that they can have income to qualify
and afford what they want to afford,
Exactly.
right? Depending on how much they're making. Okay. And then, is it true that you should avoid getting a mortgage from a big bank like Chase or, I'm not going to name drop too many, but not trying to start any wars, but, Rocket Mortgage, they had the recent Super Bowl ad that was very, moving and very emotional, and that I'm sure influenced a lot of people to call them, versus working with someone like you who has more of a personal touch. It's not a form they're filling out. They're actually, have someone accountable to the process. Tell me a little bit about that.
Right. So a couple of variations. I think you'll see a lot of real estate agents or listing agents that look at offers and they prefer not to have a big bank offer, because you don't necessarily know if they did a pre-qual or a pre-approval, or was that person maybe a teller like a few weeks ago, and now that they're in the mortgage area or mortgage banker. And you see the Rocket Mortgage and the online lenders, they tend to be more of a quantity rather than the quality type. So if it's a perfect borrower and has great credit and everything, that's probably going to be a smooth transaction in most cases. But if you've got somebody that needs a little bit more of a little bit of hand-holding or something that needs to tweak a little bit, or more research or some assistance in that way, you're probably going to be better off with a local or mortgage advisor.
Right. Okay, awesome. I'm going to do a check real quick and make sure that it's still filming, because I've done entire interviews and it cut off halfway.
Yeah, that would be good.
It's just not fun. It's not fun. You got to start over where you think you left off. Okay. What is the biggest mistake buyers make when applying for a mortgage?
Okay, that's a good one. We talked a little bit before about being organized, number one. Um, Making sure that they have a sense of urgency is probably one of the biggest ones, because that's where we have to continuously follow up with clients. But if you want to buy a home and you're serious about it, this is where your agents and the mortgage professional
Right.
see whether you're really interested in buying the home or not. Sense of urgency and having your documents organized
Okay.
so that we can get you through the
Having a
process.
timeline, right? Like
Yeah.
knowing when this would work best for your life in different seasons of life. Sometimes it's not always possible to foresee such things like death, divorce, getting married, or all of a sudden you need a house for the two of you.
Yep.
Things in life do come up, and that's a lot of what we cover on the podcast, which is great to address because I feel like a lot of real estate agents are talking about the local restaurants and what's the best city, and that's all very well and good, but that's not really getting to the meat and potatoes of why people need to sell homes. It's it doesn't come down always to upgrading your lifestyle. It's sometimes all very sudden and very serious where you need to make a change. So
Yep.
yeah, that definitely, it helps to have someone that is more customer service minded, but views you more as a person and not just a customer number like the big banks do.
You bring a good point there, and what I try to tell or relate to my clients, because there still is a fear. Sometimes they're afraid to let you know their situation and stuff. So almost tell them like, look at me as your priest and tell me
Yeah.
everything, and I'll
Yeah.
figure out how we have to make it
Who am
work
I
from
going to
there.
tell it to?
Right?
Like what,
So don't be afraid.
Yeah, that's, moving past the reservation and the doubts and just like talking to one of us. Talk to a realtor, talk to a lender about your situation, but you have to be honest with us and we're not going to judge you. That's never, where we're coming from. We genuinely want to help.
Exactly.
So, can buyers still get a mortgage with past credit issues like late payments, bankruptcy, foreclosure? I know you touched a little bit about
Hmm.
that. But in instances where, like 2008 or like COVID, where some people, maybe they were a renter and they couldn't pay rent and got kicked out, something like that on their credit, what do you say to those people?
Well, first off, we don't be afraid. A lot of clients say they automatically say they have bad credit and they don't even want to take a look at the
Yeah,
process. It's always good to take a look because you may not have as bad credit as you think you do, right? Or it may be a couple of easy tweaks or a couple of things that you can do short term to get that credit where it needs to be.
right.
So you're not disqualified for having any issues, bankruptcy, foreclosure. Now you're having a waiting period if you have any of those, depending on the loan program we're looking at or that they qualify for, would qualify for potentially.
Mm-hmm.
A foreclosure or bankruptcy or short sale or any of those type of things could make them have to wait a little while, right?
Right.
But late payments, everybody at some point in time, everybody has a late payment.
We're all humans. Yeah.
Exactly, and it's not going to negatively affect you in most cases as long as it's a one-off here. If you have multiple ones, they're going to look at the credit and they're going to look at your credit history.
Okay, great to know. What's the best option loan? Starting that one over. What's the best loan option for first-time buyers? Is it the FHA loan? I've heard a lot about grants depending on the county. Qualifying for those. Does it all look different? Is it all the same? Demystify that a little bit for first-time
All
home
right.
buyers.
So we're going to dial in. This is going to be a little bit more detailed here. So your standard first-time home buyer loan programs, FHA is not necessarily a first-time home buyer loan, but so many use it because of its flexibility and the interest rates are good and it allows lower credit scores and things like that, and only 3.5% down, of course. Conventional has first-time home buyer loans as little as 3% down for a conventional loan, so they have to be a first-time home buyer, meet certain credentials. In some cases, income is a factor in there, not making above a certain limit. So conventional has first-time home buyer loans. And then you've got down payment assistance is what you're probably talking about with the grants and things like that. So there's a lot of variations of that throughout different states and things like that. But down payment assistance, I believe, is great for that client that doesn't have any other resource for down payment. So they don't have the money that they would need. They can't save the money. They can't get a gift. Then down payment assistance could be a great option for them. Now, there are negatives. It's not always free money. So
Right.
they're not going to get, the money and not necessarily pay it back. Most of them are non-forgivable. They're second mortgages that sit on there first,
Okay.
and then they have to pay that back when they sell the home. Or if they want to refinance, which is a big restriction, they'd have to pay that second off, or that down payment assistance off, to be able to refinance, which is big in the current market with higher interest rates too. So,
Right.
but it could be a great option for somebody that fits that box, that really needs a down payment and has no other resources.
Of course. Okay.
Yep.
Awesome. And then last but not least, what is one piece of advice that you would give to buyers who feel overwhelmed by the mortgage process?
Communicate. Be honest, communicate. There's no wrong answers to questions. So, I mean, no wrong questions that we can't answer. So, communicate with your loan officer and make sure you've got your documents as organized as possible. Keep everything. Don't throw your stuff away. We see too often that people, they get their pay stub and they throw it away, or they get their bank statement, they throw it away, and then they have a hard time getting it accessed again. Keep your documents, communicate, and a good loan officer will do a good job of walking that client through the process and making sure they're comfortable and get everything answered.
Awesome. Well, let the people know where they can reach you and get in touch if they are interested in going through the process with you.
100%. Steve Birk, Strongwealth Mortgage. You can reach me at 407-375-0692. Best way to reach me, that's my cell phone.
Fabulous. Thanks again, Steve. I really appreciate you coming on the podcast.
Thanks for having me.
If you're considering buying or selling a home in Orlando, my team and I would be honored to be your trusted real estate guide through life's ever-turning chapters. At the Pinnacle Homes Group, we've got over 300 five-star Google reviews, and we've proven to make your transition smoother and less stressful, providing expert advice and support every step of the way. Reach out anytime at Savannah at... Bleh. Reach out anytime at Savannah... That sounds weird. Reach out anytime by emailing Savannah at mypinnaclehomes or comment below to connect. I'm Savannah Godbold, a realtor with the Pinnacle Homes Group at Keller Williams Classic Realty here in the city beautiful Orlando, Florida. I appreciate you listening, and stay tuned for the next episode every other week. Until then, be healthy, wealthy, and wise. Bye now. I didn't turn that off.
Cool.
Sweet.